Hi, my name is Carol from Provident Credit Union. Thank you for joining us today, where we will be discussing building business credit the right way. Your presenter today is Rod Griffin. He is the Senior Director of Consumer Education and Advocacy. And with that, I'd like to now hand it off to Rod. Welcome, Rod.
Carol, thank you so much, and I'm glad to be here and look forward to talking about something that's really important, especially for small business owners, what we think of as micro business owners, even if you're the only employer, just have a few employees, and how you can help ensure that your personal credit and your business credit are growing and protected and understand the relationships they can have there. So it's going to be really important. We'll talk about several things today. First, we'll start with, believe it or not, a discussion around personal credit, which seems odd when we're talking about business credit, but they are very closely related when it comes to small business. And I think it's important to understand some fundamentals there before we jump to the business credit reporting piece of the puzzle and how you can manage both and how they interrelate. We'll talk about the value of having positive personal and business credit histories separately. And we'll talk about things that help you understand how your personal credit can affect your ability to get credit for your business and how your business credit could then affect your ability to qualify for personal credit. We want to make sure that both work together effectively. And then we'll talk about how to manage both your personal credit and your business credit to help you and your business succeed. And if there are any issues, one not affect the other, which is equally important. We'll start with credit reports and personal credit reports specifically, and just to lay some groundwork so that we can then skip forward to or move forward to business credit. The first is understanding what a credit report is in the first place. Your personal credit report is simply a record of your financial accounts and obligations, the identifying information that goes with them. We call it a credit report, a credit file, a credit history. We, as a credit reporting company at Experian, collect and organize that data about your credit history from various creditors and about bankruptcy public records. And those are all personal credit relationships. The credit cards you might have, the car loan, your mortgage loan, other kinds of personal loans you might have that would be in your personal credit history, not your business information, although that could appear there too. So when we talk about what's in a credit report, just quickly in a personal credit report, you're going to see first your identifying information. We need to know who you are. There are about 220 to 250 million people with personal credit reports. You're not the only one with your name in most cases, so we want to make sure we know who you are. So we'll have things like your name, your address, your previous addresses, your social security number, your date of birth. We might even list employers if you've had other jobs that you've reported or included in applications in the past. It's not an employment history, it's really an identifier. So you'll see that information there. You'll also see variations in your name or your address, your social security number that are reported. Those aren't errors. They're there to show you what's been reported. If there's identity theft, for example, we want to make sure that you see that information and can act on it. It doesn't affect credit score, something important to understand. You'll then see account information for your personal accounts, your credit cards, what we call revolving accounts, installment loans that you make a payment each month, auto loans for cars, for example, mortgage loans, and other kinds of accounts you might have. With that information, you will see the payment history for those accounts. Are you paying on time? Are your payments late? With credit cards, you'll see the credit limit and your reported balance. So your balance is high as compared to your credit limits, what we call your utilization rate. You'll see the type of account, who the lender is, the account number that's reported to us. You'll also see how you're associated with that account. Is it an individual account, a joint account? Are you an authorized user? Are you a primary account holder, and so on? And you'll see the status of that account. Is it paid current? Is it late? Is it open? Is it closed? So you see that information in the report. That's really the heart of a personal credit report. You'll see something similar in business credit reports when we get to those. On a personal credit report, you'll only see one type of public record these days. You'll see bankruptcy public records, whether it's Chapter 7 or Chapter 13. All other public records have been removed from a credit report. So you wouldn't see things like a civil judgment if you're sued in court and you lose. You wouldn't see things like in the past, I wouldn't see library fines, believe it or not. When I started with Experian 29 years ago, we had library fines if you didn't return your library book, parking tickets, Tax liens, whether paid or unpaid, are no longer part of a credit report. So you would only see bankruptcy public records today. You'll also see a record of the inquiries into your credit report or requests for the credit report. There are historically two types of inquiries. The first are what we call hard inquiries. Those are your applications for credit. They indicate that there may be a new debt that doesn't show yet on the credit report. So they indicate a bit of risk, and so they can be shared with lenders. They might affect credit scores a little bit. That's the least important factor in credit scores, so that's important to understand. The other kinds of inquiries traditionally are what we call soft inquiries. Those are inquiries that are the result, for example, of your request for your personal credit report, for insurance purposes, for employment purposes, for what we call pre-approved or pre-screened credit offers. Those are only shown to you. They don't affect credit scores in any way. You don't have to worry about those, but they're there for a record of everyone who's looked at your report. There's now a third sort of in between kind of inquiry that's starting to appear. It doesn't yet get shared with lenders, but if you have a buy now, pay later loan, you may see that in your credit report as an inquiry, and you may see the buy now, pay later account. It's reported by a firm currently. There are others that we expect to start reporting soon. Those inquiries will show as soft inquiries, so they don't affect credit scores, but they may be shared to lenders to give them visibility to those buy now, pay later loans because they're different. We want to make sure that buy now, pay later debts are available. Lenders are telling us they need those. They're growing and they're getting larger, so it indicates some risk. So it gives them visibility, but it doesn't affect your credit scores. And so you may start to see those. So you don't have to worry about affecting your credit scores, but lenders will have awareness of those inquiries. And then dispute instructions when you get a personal report. If you find something you believe is inaccurate, you can dispute that information. Very easy to do. You can do it online or by telephone or by mail. Online is the fastest, safest, and most secure. So we recommend that in most cases. So pretty straightforward with regard to what's in a credit report. The other thing that we get asked a lot about, I think is important to understand as we then will compare to business credit reports is how long information remains in that personal credit report. Open accounts in good standing remain indefinitely, so they can be there for decades. I've seen credit cards that have been open for 30 years or more. If you have an account, you close that account, that closed account will be reported as closed and it will remain 10 years from the date it's reported closed. So we keep the good stuff longer than the bad stuff. So closed accounts don't go away. You don't lose that history right away. It remains for 10 years. Late payments remain for 7 years from the date of the missed payment. We call that the delinquency date. Gets a little more complicated with collection accounts. Collection accounts, if you have an account, you are unable to repay it, it's charged off as a loss by the original creditor and sold to collections. You'll see a record that it's been sold to collection or transferred to collections in that account. And then you'll see that collection account. The collection account is deleted 7 years from the date that the original account first became late and was never current again. So what we call the original delinquency date. The collection account and the original account are deleted at the same time. So we treat a collection account as a continuation of the original debt. And the collection agencies, as a matter of federal law, must report to us that original delinquency date. So you can work with the collection agency. You can arrange payments with them if you want to. You can negotiate with them. It will not change when that account gets reported. So it's 7 years from the date the original account first became late and was never current again. Chapter 7 bankruptcy remains for 10 years from the filing date because you do not repay any of the debt. Chapter 13 bankruptcy actually remains for 7 years because you do repay part of the debt, so it doesn't stay quite as long. And then inquiries remain for 2 years, even though those hard inquiries really only affect credit scores for a matter of typically 2 to 3 months, and then fade even further over time. FICO says they don't recognize them at all after 12 months. So really don't have to worry about those too much, but they're there for a record of who's looked at your credit report. And then the other thing we get asked about is what's a credit score? And people think about credit scores and credit reports as the same thing. In fact, they're not. They're two different things. A credit score is a tool used to analyze the information in your personal credit report, also used to analyze the information in your business credit report, but they're different. And we'll talk about that. A credit score is simply a tool that's used to determine the risk associated with lending to you. There are many different scores in the personal credit reporting world with different scales and from many different sources. So you're probably familiar with FICO, the Fair Isaac Corporation used to be called. That's what FICO stands for. FICO is a credit scoring company. They own those scores that are calculated using their algorithms. We provide the credit report. Scores are determined by the lender, what scores they use. We'll route the report to the scores in some cases. In some cases, we send the report directly to the lender, and then they score that report. There's a company called Vantage Score that you may also be familiar with, and they compete with FICO. There are others out there as well. I've seen scores with scales that range from 350 to 850, which is kind of common, to from um, 75 to 108 on one model. So there are different scores, different models for different types of lending and different types of lenders as well. People just want to know why there's so many. Well, Provident Credit Union know their customers. Their customers may be different than, say, a large national bank. And so the scores can be different because the customer behavior and the way they manage their debts is different. So they have different scores that they use. So different types of scores for different lenders. There are also different types of scores for different types of lending in the personal credit, consumer lending world. So if you're buying a car, they'll use a different score than if you're buying a house because they want to know if you'll pay your car loan on time. They're not so worried perhaps about the mortgage loan. Credit card companies have scores that are different than auto lenders because they want to know you'll make those credit card payments on time. So our role as a credit bureau at Experian is to provide the credit history that's used to do the calculation. We may route a score, as I mentioned, pardon me, a credit report through a scoring model that's specified by the lender, but we may also send it to the lender first. It may not have anything to do with the score at all. So it's important to distinguish between the two. Score is a tool to use to analyze the information in the report. It's not part of a credit report. It's a separate process. In the consumer lending world and consumer credit reporting world, they're two different things. It's not part of the report. Experian doesn't do the consumer score. And you'll find that's different in the business credit world. Vantage Score, I want to cover a lot here. Vantage Score is a competitor, as I mentioned, to FICO. I like to share this because it gives you a sense of what goes into your consumer score. And again, this will all come full circle. In this case, I usually see a pie chart. This is their donut, but we'll circle back to the business credit report in just a moment. And you'll understand why it's important to understand the two and the differences. Payment history is going to be the biggest factor in credit scores in every instance, whether business or consumer. In the case of Vantage Score, it's somewhere around 40%, depending on your credit history, might be more, might be less. Utilization rate on your credit cards as a whole, it's about 20%. Balances on individual credit cards is another 11%. So high balances compared to credit limits is going to drag down your credit score. That's going to be in total for Vantage Score about 30%, a little more, give or take. Again, depends on your personal credit history. You'll see similar kinds of percentages for FICO scores. But the most important things, pay your bills on time, keep your balances low. From there, everything builds on that. How long have you used credit? And what is the mix of kinds of credit you have? What have you done recently? Have you paid things off? Have you opened new accounts? If things become late, it's going to be building on that. It's about 5%. And then your uh, overall kind of capacity accounts for the other 3% in Vantage Score. Again, you'll see similar breakdowns. It's important to understand one or actually two simple things. There are only two things that really are important with credit scores when it comes to having good scores. You have to pay your bills on time every time. You have to keep your balances on your credit cards low on a personal credit report to have good scores. Everything else builds on those two things. And if you're doing those two things, you'll do well otherwise. And again, I share this because it's important to understand what goes into those scores because your personal report as a small business owner will come into play. When it comes to the numbers, I sometimes tell people just to get your attention, and in part because it's true, the number doesn't matter. Knowing the number isn't very helpful if you don't know why that number is what it is. You need to know what's driving it. Every time a personal credit scores they're calculated, a series of risk factors are generated. They tell you what from your personal credit report most affected that score. If you focus on those risk factors, all of your scores will get better. So they'll tell you exactly what you need to focus on. So look at the risk factors, set the number aside, and as a business owner, you'll see the same thing in a moment with business credit scores. But you'll also see some very significant differences in business credit scores. So focus on the risk factors. So that gives some sense. It's important to understand personal reports because in most cases, small business owners, when you're beginning your business, opening your business for the first time, and financing it, you often use your personal credit report to get a loan to buy equipment, to establish that business, to secure facilities, all of those things initially. And so your personal credit report may show debts that are personal debts that are tied directly to your business. So understanding how that personal credit report works, how those scores work is going to be important to getting started. From there, it becomes important to, as soon as you can, separate that personal credit from your business credit and to begin to establish business credit because you don't want your business, if things aren't going well, to affect your personal credit. And you don't want your personal credit to impede your ability to grow that business over time. You want your business credit to grow. But understanding the fundamentals of personal credit is going to help you do that. And then you move into the business credit world. Experian isn't only a personal credit reporting business. In fact, we're much more than a credit bureau in a number of ways. But one of the other things we do is we have a business credit reporting business. We call it Experian BIS, Business Information Services. That business collects and stores information similar to the way we do personal credit for businesses. It operates in a very similar way. Your business credit report will act as your financial references for the business or your business's financial references. The information in the business credit report can be a bit different. It includes your business creditors, of course, just like a personal credit report, but it may also include information from your suppliers, from wholesalers, from other manufacturers that you may have relationships with, maybe leasing companies that you're working with or other financial institutions. There are more than 25 million businesses in the US that have established business credit relationships. Having that business credit report there for your business is going to help you grow your business and ensure that your financial access for your business is what you need it to be. So establishing a business credit report is going to be really important. Similar to your personal credit report, there will be identifying information in a business credit report. So the company's name, it will include information about the key personnel, so the officers of the business, the owners, other key employees. The standard industry code, your SIC code will be part of the credit report, so it identifies what your business does. It will include the business type. Are you a corporation, incorporated? Are you a limited liability corporation? Will be part of that credit report. It's critical when you're establishing a business report to be registered properly so that you can establish that business credit report. That's one key component. It will include the address of your business, a telephone number, at least one, maybe more of the business credit report. It will show the date of incorporation, show the number of years that you've been in business. It will also list the number of employees that are reported and your sales figures. So how much revenue did you generate in the past year? So it's going to show the strength of your business and your strength of your financial standing currently for that business. Very similar to a consumer's business credit. I will back up. Sales, your revenue is different than a consumer report. A consumer report, when you look at that, your personal report, it will not show things like income or assets. So different in that regard. So your business credit report will help show that for the business. Your business credit report will also show key payment information, things like current days beyond terms. It may show a payment trend indicator, which is very different than a personal report. So how are your payments being made over time? It will show the lowest 6-month balance. It will show the highest 6-month balance in your payment history. It will show the current total account balance, the highest credit amount extended, the median account extended as well. And then it will show individual account information for that business. Similar to a personal report, it will also show inquiries, who's asked for your credit report, and it will show public records beyond those that are in a personal credit report. Your business credit report, for example, could show lawsuits that have been filed. So if you've been sued, it may show that in the business credit report. It shows business strength and what's happening there. So those kinds of public records, as well as bankruptcy records and the kinds of other things you might think of. So it's really important to take care of that business credit report, have that business credit report established. Your business credit score is very similar to a personal score, but also very different. Unlike a personal credit score, which is owned and proprietary to companies like FICO and the credit report. It's not part of that credit report. In business credit reporting, your business credit report is an Experian score, and it is part of the business credit report. So your credit score will help your potential vendors, your potential clients, the lenders evaluate the risk of doing business with you, help streamline that application process. It can be purchased with a business credit report. It's different in that the scale on a business credit report is 0 to 100. The higher the score, the better. So a higher score means lower risk. So you'll be able to see that right away. Like a personal report, you will see the risk factors that go with that score. They describe what's negatively impacting that credit score. So as a business owner, you can look at that business credit report. You can see what's affecting that score negatively, so you can take action to make changes so that your potential vendors, your potential lenders can see you as a better risk, and you'll be able to qualify for the credit you need when you need it. So 0 to 100 in business. In personal credit scores, it can be lots of different things. So knowing that having a business credit report is going to be important as a small business owner, the question becomes, how do you establish that business credit report? Well, to establish a report, you need to ensure creditors and suppliers can validate your business information. So you need to incorporate or form an LLC. You need to obtain a federal employer identification number. You need to then open a bank account for your business. It could be, a checking account, could be a loan, it could be a credit card with a bank in that legal business name. And so the loan needs to be to the business, not to you as the individual. You need to set up a dedicated business phone line. You need to make sure it's listed. And you need to establish credit with companies who then report that trade and payment information. From there, Experian will be able to pick up that information. It will be reported to us, and we will be able to start building that credit history for you essentially automatically. And so once that information is reported, it will be updated regularly and can then be accessed by future lenders. It could be accessed by potential clients. It can be a great marketing tool if your business is doing well, to say, look, you can look at my business credit report, get a copy from Experian. It will show you that my finances are strong. We've been around a long time. The bills are paid on time, and you can rely on us. So it's a great marketing tool. To get a copy of your business credit report, you can go to one of two business credit reports, or one of two websites from Experian. Go to smartbusinessreports.com or to experian.com/business credit report. You'll be able to get a copy of your credit report. If you have been declined as a business, your business application within the last 60 days, you can get a free copy by contacting the Experian Commercial Relations Group at 888-211-0728. And you can purchase a scored report as well at those websites. So easy to get a copy and know what's there. To monitor your report, you can do a couple of things. When we think about monitoring our personal reports for fraud, identity theft, other things, you can do the same thing from a business credit report perspective to make sure the information is accurate, that it's up to date. You can order it one time from Experian, or you can sign up for a business credit monitoring service called Business Credit Advantage. If you do that, you'll get unlimited access to your business credit report, your business's credit report. You'll get email notification of changes to that report, and you'll get early warning of any negative changes or potential identity theft. And I just, actually just a few weeks ago, was talking to our media relations team, and there was a reporter working on a story about fraudulent businesses being set up, actually in Southern California, using stolen information and consumer information. So it does happen. So it's worth potentially monitoring to make sure your business isn't affected. So that comes to a really key then question. You have a personal report, business credit report's established. As a small business owner, I'm often asked, can my business credit report and my personal credit report be linked? And the answer is no, but they can be related. So your business credit and your personal credit report will not be blended by Experian. You wouldn't connect them directly. But if you secure business credit using your personal credit can play a part in business credit decisions. And so it's important to separate those. When you think about the role of personal credit reports and business credit report, the Fair Credit Reporting Act, which governs consumer credit reports or personal credit reports, does allow lenders to review your business credit report pardon me, it does allow lenders to review a personal credit report for business lending decisions if you're the proprietary of an unincorporated business, if you're in a business partnership, or if you are using your personal credit to guarantee a business loan. The personal credit must only be used for business credit, that business credit transaction. It can't be used for personal credit decisions in those situations. Securing business debt with personal credit will make you personally responsible for that debt. It's really important to understand that. If you're securing business credit with personal credit, you become personally responsible for that debt. It gives lenders a right to report the accounts and any mispayments on both your personal and business credit reports. So if you use personal credit to secure business debt, if something happens to that business, it can affect your personal credit. You can be held personally responsible. That's why it's so critical to establish a business credit report and independent business credit. Your personal credit report and your business credit report can be scored, or your personal credit report in that case could use hundreds of different scoring models that are out there. Your business credit report, you would see that 0 to 100 Experian score, and they will use those scores to help evaluate risk using your personal credit. So they aren't linked in a single report, but they can be related. Really important to understand. So that leads to another question. How can your businesses and personal credit reports be used together to benefit your business? Well, we know that more than 90% of US businesses are small businesses that have fewer than 25 employees and less than $20 million in annual revenues. Small businesses may have, and small business owners may have little or no credit history initially upon which to base a decision. So half of all owners use some form of personal credit to finance their small business. As soon as you can, establishing a business credit history is going to be really critical to growing that business. Your personal credit may act as a reference for entrepreneurs, but once established, your business credit report will influence suppliers' willingness to extend credit. It will affect the loan amount and terms that you may qualify for. It may also affect your business insurance premiums. It could make them lower. So it has tremendous uh, financial impact on that business and your ability to be successful. So really critical. If you look at your business credit report and you feel that information is incorrect, several things you should do. One, obtain a copy. As I mentioned, you go to experian.com/business credit report or smartbusinessreports.com and get a copy of that report. If you find incorrect demographic information, you can update it at businesscreditfacts.com. Other disputes you can submit in writing. Instructions to do that will be provided on that business credit report. That dispute resolution process typically takes less than 30 days, very similar to a personal credit report, where lenders must respond within 30 to 45 days. You can monitor that report for changes over time. If you'd like to speak to a representative, you can call 800-303-1640 at our business credit help desk. They can assist you. So you can contact us, know more about it. Make sure that you get your questions answered, and you can dispute just like you can on a consumer report. In terms of how long information remains, again, very similar to a personal credit report. We use standard industry and government guidelines. There's no law for business credit report like there is for consumer credit reporting. Consumer credit reporting is governed by the Fair Credit Reporting Act, and there's no regulation similar to that in business credit reporting, but we use industry standards and government guidelines for how long we keep data on file. There are expiration dates for data to ensure that the information is current enough to create an accurate picture of financial health. You know what? Old data doesn't lead to accurate decisions. So trade information will remain for 3 years. Bankruptcies remain for 10 years. Judgments against the business remain for 7 years. So if your business is sued and you lose, it will remain for 7 years. Tax liens remain for 7 years. UCC filings are on the report for 5 years. Collection accounts remain for 7 years. And bank, government, and leasing data and payment information remains for 3 years. Excuse me. So very similar in terms of if you compare it to a personal credit report. So understanding what's in that business credit report is critical. Understanding how it can relate to your personal credit is essential, because as a small business owner, if you are securing business credit with personal credit, the two can be linked together, not blended, so they can have an impact on each other. So Growing your business is much easier with good credit practices. If you maintain a distinctly separate business credit profile, it's going to help you grow that business and not put your personal credit risk, and vice versa. If you have a distinctly separate business credit report, your personal credit won't affect your ability to qualify for financial services for that business. You need to stay current on your payments with creditors. Ensure that your good payment history is reported to the credit bureaus by ensuring your business is established and registered correctly, and you provide that information. Monitor your business credit profile. Know what's there. It's going to help you prevent fraud or recover from it if you discover it, and it's going to help you ensure that information is accurate, complete, and current. And use business credit reports to limit your risk of doing business with others. If your business has a credit report, theirs should too. Check their business credit reports. Make sure that they're paying their vendors well. If you're going to be a vendor, it gives you the ability to know what's in that potential um, business partner's history to know that they'll pay you well, or if there are any issues with that business as well. So business credit reports are a great tool to use in that regard. We have a score planner tool that you should be aware of that you can use to develop a strategy to enhance your business credit report and credit score. So it will show you when you get your business credit report what you need to do. You can use that score planner to run through scenarios and see what would happen if you change certain payment strategies, for example, in your credit history, or reduce debts that you owe, change payment terms that could help you then see what would affect your credit score for your business so that you could then take action to be able to improve that score and improve your business standing. Again, go to experian.com/business credit report to learn more about your business credit report. You can get a free credit report, personal report through annualcreditreport.com every week. It's no longer once a year from each of the three bureaus. It's actually once a week from each of the three bureaus. So you get 156 free personal credit reports a year if you'd like to do that, annualcreditreport.com. You can learn more at experian.com/credit-education, as well as at experian.com/consumer education. We have a great personal credit report blog at Ask Experian. So experian.com, you can find links to that. And if you go to businesscreditfacts.com, you can learn more about your credit history, your business credit report, how that works as well. And the good business score planner, as I mentioned, you go to sbcr.experian.com score planner. You'll be able to see that score planner and how it can work for you. And with that, I will stop talking and turn it back over to Carol. Thank you so much for your time today, and I hope the information has been helpful for you.
Thank you. This concludes our webinar for today. We hope you found this session helpful. Thank you for attending.